How are we doing? How are we doing? So, nice of you all to see you again. As you know, last week we covered how do we, just a little bit of a peek of interest into fundamentals, what's important. We did cover briefly on the Fed. And we'll go over that as well. And we'll just sort of discuss what this means for the dollar going forward. And of course, as you all know, I like to show examples, or those who know me, it's all good knowing backtesting, but it's all good to know how do we apply this to live markets. And that's what I'm going to talk about today during our session. As you know, you're more than welcome to ask in the chat. I do have it on my other screen over here. Please ask questions, because fundamentals is not easy, as you know, by any stretch of the imagination. So please ask questions. So let's start off with asking some questions to you, because I want to see kind of what are people's thought processes on what we are going to discuss. So what do you think when the Fed spoke last week? What do you think this all meant? Can anybody tell me, what does this mean for the dollar? How do we look at this in terms of future-proofing the dollar, or understanding where can the dollar price action go in the future? What do you think is necessary for us to understand? Let's just sort of get a little bit of a grip on what you believe is expected. So let me just quickly refresh. Sorry, give me 2 seconds. But yeah, let me know what you think in the chat. Pull this open over here. Cool. So if you don't know, that's fine. You can always guess or sort of have a rough gauge. But do you think what we saw means stronger dollar or weaker dollar in the future? Because remember, price actions already happened now. So that's past data or past fundamentals. How do we understand what is going to happen in the future? Does anybody know? Because this is how we apply it onto technicals as well. Because it's all good, like you all know, it's all good knowing the theory, but it's how do we apply this onto actual markets as well. Nobody? Okay. Cool, no worries. So here's how we do it. When you look at the dollar, right? So let me share my screen over here. When you look at the dollar, you must always think about what is the expectations for the future. Because remember, when you trade fundamentals, you have to be thinking what could happen in the future and then apply your technicals, so on and so forth. So if you think that because what the Fed spoke about last week suggests further strength, then you only look for demand zones on the dollar. What do I mean by that? So let me bring up my chart over here and let's just go on the daily time frame. And we'll have a little look at what we've got going on. So here's a good way to understand previous sessions, by the way. What I did when I first started doing this vertical line thing, I'd done this basically, you can see I've actually never deleted my DXY chart before since 2023. I have deleted individual little drawings and stuff, but these vertical lines, right, are all the Fed meetings. Fed meeting, Fed meeting, Fed meeting, Fed meeting, Fed meeting. So what you do, right, and this helped me at the start, was obviously you need to know what happens in terms of data, which you will learn and which I hope to teach you through our sessions. But you have to also think about what could happen in the future after the vertical line. So for example, if something like the Fed here, right, if we just look at a historical one, you can see here how on Wednesday, the 3rd of May, 2023, we had the Fed meeting. So there's the reaction of the DXY. And then we saw a big old pump. So what you have to do, if you want to do a little bit of back testing to sort of get your mind into sort of the rhythm, just go out into history and look at when the Fed spoke, what did the dollar do after? Why did it happen? Ask these questions. Why did it happen? Was there data that came out that people was not anticipating? Maybe through this period here, we saw a good amount of strength that battled the reasons why we saw previous dollar weakness through this period. So I spoke about last week, this. So let me just zoom out. And then what I'm going to do is just draw a text box and we'll have a little chat. So what you have to be doing, right, is as follows. You have your bias. That tells you either long or short based on fundamentals. Cool. So we know all that. That comes from understand what the Fed says, understanding the data, etc. As I said, that comes with time. I'm not expecting you to get that first time, obviously. Have your bias, either that's short or long. Let's say we're long. So let's put a bracket, long. Cool. What do we do in terms of technicals? Only look for demand zones. Meaning, you've done all the work from a fundamental perspective, but you're going opposite to what the trend suggests. Does that make sense? So it's like when people say, we've all heard this saying, the trend is your friend. That's cool. But I've seen people they say the trend is your friend, you must always trade with the trend, but then they go opposite to the trend. To me, that just increases the probability of you taking a loss. So what we want to be doing in trading is eliminating as many losses or reducing the probability, because losses will always come, but reducing the probability of you being confused in markets and taking unnecessary losses. Because there's periods of time, right? I know for myself, I'm not sure about everybody else, but I know for myself where I had my bias. Let's say I was in this example long, right? So we're trending upwards. Cool, we know, a nice little trend. We look for demand zones. That's cool. So we buy up at the demand zone. But then I know some people would look as a supply zone here and try and sell it, and then it goes back up again and takes you out. How many of us have seen this price action before? Where you go up to buy, you buy price action. Oh, we buy it here, cool, as a nice demand zone because it makes sense, cool. And then you try and sell it off at a supply zone. And then it goes in a little bit of profit, cool, but then you take an unnecessary loss and you're like, oh, well, that's basically reduced my RR now on the long that I've just taken. How many of us have seen this before? I know for sure I've done this, but what I've realized now, because who wasn't with me on my first session, I've been doing this for almost 8 years. So I've learned a lot and I've also been battered a lot. But I know for sure there's a lot of people who would buy up and try and sell into your buys or try and buy into your sells, and then you realize that you just take unnecessary, or you sort of notice that you take the most losses when you do those trades. I know for sure. So what I do now is I only look for demand zones if I'm fundamentally long, and I only look for shorts if I'm fundamentally short. So if we know the dollar, right, is expected to go higher, and as I said, we'll speak about it a bit later in terms of sort of the thought process you should be having going forward. Here's what you should be doing, or what I would be doing. Let's say you're long. Cool, you try and buy up at demand zones, cool. Then we get into a demand zone. Does anybody know what price action you would be waiting for to increase the probability that that demand zone is going to be hit? Does anybody know what price action you'd be waiting for? I'm sure everybody does this, but what I have noticed is a lot of people try and overcomplicate the charts. Yes, it's a very complicated market in a different degree, obviously, in like the data and stuff. That's where most of the work should be going. The technical should be relatively simple. So does anybody know what price action you'd be waiting for in a demand zone or a supply zone to say that this demand zone or this supply zone is the region, shall we say, that seems to be bouncing from? Because nobody really knows what demand zone or supply zone is going to be hit, but what we can notice is price action. So what price action do you think I'll be waiting for here? Oh yeah, the giveaway, if you put exclamation mark join, that puts you into the giveaway. And as you know, please don't spam it, otherwise it will remove you. So just exclamation mark join, and that will put you into the giveaway, which I'll do later on. Volume, this is an interesting thing. When you look at volume, So we have TradingView, obviously. Like I'm using TradingView. When you look at volume, I don't know if I can find. I don't think I've ever used volume in my life. But what you notice about volume is, I don't even know how to look at it. To be fair to you. Yeah, I don't think it will come up on this one. But basically, with volume, you're looking at that specific broker's volume. You're not looking at the whole market volume. So it works in futures because obviously futures goes through like a centralized market like CME or the Chicago Mercantile Exchange, which is CME. It all goes through pretty much one thing, right? Or you obviously got the New York one. I'm not a master at futures. Obviously, we got guys here in ChartFanatics who are, so ask them. But the volume, to read volume on that makes sense because it all goes sort of through one thing. But with CFDs, it doesn't really work like that because you're looking at that specific broker's volume when you're looking at TradingView. So volume to a certain degree, I think it depends on the actual assets you're trading. Futures would make sense, but on standard CFDs, it doesn't really make any sense. Small time frame turning, that is correct. I wait for break of structure. Break of structure and yeah, a break of structure of a high time frame demand zone. So for example, let's say this is a daily. So I'm on the daily time frame at the moment. What I'll wait for is a daily area of demand. Let's say it's here and we get in, cool. We don't instantly buy it when it hits the demand zone. Because remember, the fundamentals tells you the direction. The technicals gives you the confirmation on the technical perspective. Because we want two things to work hand in hand. Because what we want to be doing then is as we get into the zone, we want to be waiting for a break of structure, or people call it market structure shift. It's pretty much the same thing. We want to wait for a break of structure if we're buying, obviously above the lower high. So now the lower high has been broken. We then wait for the pullback afterwards. So now that we can think that probabilities would suggest that this demand zone seems to be the demand zone that we hit in, because I know for sure for myself, sometimes I'll be marking out a demand zone here and it breaches straight through and goes to another demand zone slightly below it. So what we want to be doing is letting technicals play out. We know the direction it should be going. We then let technicals play out. So once it comes in and breaks structure out of our demand zone, I then drop to the hourly time frame. So I'll do something like this. Let me see if it's going to let me find it. Cool. Is it going to let me find, whereabouts is that? Oh, there it is. So let's say this is the hourly. For some reason, the hourly time frame just looks a little bit bugged at the moment. I'll be waiting for, let me zoom in. Come on. There we go. So wait for, let's say I'm on the hourly time frame. I'll then wait for a break of structure out of the high. Then I'll wait for the pullback. Any demand zone, as long as I see a little bit of a reaction, I'm then entering along. And my stops will be below the higher time frame demand zone. Meaning, if this created the wick like this, and that's the demand zone candle, like that, my stop loss will be below this wick. Because if we break below that zone, then it's going to continue down to a next demand zone, let's say down there or down here. But what we have to work for is probabilities. So let's say it now breaks out of our zone like that. Then once it buys, stops below the high time frame or the high time frame demand zone, let's say here, and the wick here, stops below the low. Target is very simple. Does anybody know how to target when you look at FX? Let me see. I am trying to just go back and back. Apologies. Let me start from the top again. Mark, how can we form our bias? I mean, what news we should look for and how we interpret that. I'll get onto that soon, because I'll speak about that for about 10 minutes or so, 10, 15 minutes. So I'll get onto that. Hi, Mark, do you think there's a way to source data preempt with CPI? I will probably say even... I can help you with that. It's a bit difficult, obviously. A good way to... predicting data is not always 100%. So what you generally want to be doing is waiting for the event to happen, like CPI or NFP, and then interpreting what that means for the future. By that time, obviously, price action would have moved. Cool. That's mostly algo driven. Then when the pullbacks happens is when we get in. As long as we know what that data means in terms of the future, or how do we interpret that for the future? That's what I'm also interested in. I'm not interested in trying to catch the move on the news. We're interested in having confidence to hold that position. So I'll get onto that, those two in just a moment. I have a little confusion between personal account versus funded. Which is my best low capital? Or funded if it's around $60. Personal, you can't really grow a personal account with $60, to be honest. You are going to need a fair amount to actually see some decent results. As long as you're not, obviously with personal capital, you should not be over leveraging. Any trader should never be over leveraging. But if you're trying to make a lot of money with like $60 or $200, $300, you're going to have to over leverage, which obviously is a bit silly. So in that scenario, I would personally choose funded. But that's just me. The giveaway is as follows: a 300k Apex account, a 3-month Trade Zeller sub, and a funded Next account. So yeah, that's fine. Daily, I'll wait for at least a 1-hour shift. That is perfect. That's what I like to do. Can you please explain funded versus personal capital? So funded accounts is actually generally quite new. So when I started, funded accounts didn't exist. So we had to, unfortunately, do it the long way. But nowadays you have access to, or you have the potential access to make good amounts of money. So before COVID, because that's when prop firms really popped off, or after COVID it popped off, but before COVID, what you had to do was either save money, have money elsewhere, put it into a personal account, make sure you don't over leverage it, because obviously personal accounts are generally leveraged 100x, 1 to 100 or 1 to 30. I always recommend about 1 to 30. That way you don't have the risk, or you don't run into the risk of over leveraging your trades. And then you had to just grind it out. Nowadays you've got prop firms where they basically give you pay for a fee, you then pass a couple of phases, you get access to a demo, 100k, 50k, cool. And then what you make from that gives you, or they obviously then have a profit split, and then you take what the profit split is after. But the good thing about prop firms nowadays is you can have access to like a 100k account, which can give you a good amount of access to capital that you may not necessarily have. Like to make like, I don't know, a 2% on £1,000 personal account does not seem very great, but a 2% on a 100k demo funded account sounds a lot better. So it's good to have access, but you do need to have the knowledge to trade before you do any sort of live or funded accounts. Otherwise, you're just going to go through unnecessary losses. Sorry, I'm just trying to work through these questions. Apologies. Do you have to be here to win the giveaway? Yes, you do. Not yet. The giveaway will be a bit later on. Guys, you can Google. Yes. Cool. So, yeah, anyway, where was I? What you want to be doing, right, is you then have your bias. This is how we apply it to technicals, by the way. And then what I'm going to get onto is sort of the questions earlier about how do we understand sort of what data could be doing in the future. And then you can kind of position yourself accordingly. I generally don't always do that, just because data, you might say, oh, data should be this, but then it comes out as the other one. And you're like, oh, nobody really expected that. And then it was huge volatility. So it just doesn't make sense to me to do that. So I always wait for the event to happen and then I get in. Whole numbers and structure, that is correct. Yes. So once it breaks out of the high time frame demand zone, drop down to the hourly, break a structure on the hourly, buy it, try and buy it off a demand zone. Once you see a little bit of movement out around that zone, stops below the high time frame demand zone, and your targets would be as such. So here is how I target when I'm looking at trades. So does anybody know how you would target? So there's two ways that I like to do it. Does anybody know how you target on the higher time frame? Or just, you can even apply this to lower time frame as well, by the way. Some people like to use fibs, that's fine. But there's one way in particular that you would like to target when you look for longs or look for shorts. Does anybody know what you'd be doing? Let's see. So let me draw out the chart. So let's say we come from a downtrend to an uptrend on the high time frame. We now are at this part of the chart. And like I said before, last week, if you go back in time and just, this is how I would do it. Let's say the dollar erratically moved lower here in this period. What I would do is go onto Forex Factory or any news websites, go back to the time, let's say, I don't know, for example, the July till that month. Apply settings. This is what I would do. None it, dollar only. If you're looking at euro dollar, then I guess put on euro. And then only look and see, has the data during that sell-off become very weak? If it has done, then that tells you that fundamentals is the driver of the markets, right? It gives you that direction. When you see pullbacks, like what we've seen with the dollar recently, a big old push, that's happened for a reason. When you see these big old sell-offs in the dollar, these happens all for reasons. These big pullbacks or these pullbacks here happens for a reason. So what we have to interpret as traders is understanding what is important and what's not important. Aim high time frame swing, that is correct. Previous highs or risk to reward specific, yeah. Liquidity, I don't trade liquidity concepts. Support and demand zone, yeah. Next top, cool, that's all correct. Another one I would add on is whole numbers. So what I would do is mark out previous highs and target those. If they sort of roughly align with a whole number, let's say here at, where is it? 111,500 would be a target for me. 111,500. I think it's called quarter number theory, if I remember correctly. Quarter number theory, I believe, 25s, 50s, 75s, and zeros. Around here, let's say would be 1112,250 would be a target. You can also use those for entries in terms of if, for example, here, notice how this demand zone is around 110,500. That's a good confirmation of a good high time frame demand zone. That's perfect. That's what we want to be seeing. So that's what I'll be doing, right? Is I would either be aiming for the highs, aiming for whole numbers. Those are the two things I'll be doing. So stops below the low. Fundamentals tells me to hold, so I'll continue to hold. Hold, we're going to see erratic price action, of course. Once we continue to pull back, we get to 111.50. Then you can obviously take partials. That's perfectly okay. Then if it still makes sense to go long, that's when we look at fundamentals. Then we wait for the pullback, apply the same logic, demand zone, break a structure out of the region into another demand zone and look for a long into another higher time frame level. And you just continuously repeat the process until you see something change, and that will be the data. So the question, let me just go back, sorry, and sort of see what those, let me see, double check the question again. Source data to preempt what CPI will be doing, say even before the data releases. Cool. So the question is, how do you basically predict what the data in the future is going to be? Some people will have a good gauge because they'll have stuff like Excel spreadsheets and stuff like that that can give you a bit of a guidance on what the data could be at, but obviously it's not always 100%. Otherwise, there'll be multi-billionaires. But what you can do is as follows. So let's just look at this week and we'll have a little look at this week. Here is kind of how you have a rough gauge of what you want to be doing. So let me just look at the USD only, because technically NFP is meant to be this week, but is tentative because obviously the lockdowns are still happening. So what you would do, or what most people would be doing, is as follows. In ISM data, you have employment data. So let me just add that onto a text box so we can come back to that. So PMI data has employment data. Because if we're trying to, what we're trying to think now is NFP. So I'm only looking at any employment data. So we have PMIs, we have JOLTS this week, or was meant to be. We have ADP. You then have, let me double check. Oh, we were meant to have JOLTS, but obviously that's not happened because of the lockdown. And then, let me go back to a time when there was no lockdowns. I think that'll be easier. So, NFP, JOLTS, manufacturing PMIs, services PMIs, and ADP. Cool. Generally, what you do, right, is as follows. Has PMI employment done well? Has JOLTS done well? And has ADP done well? If JOLTS has an upside surprise, ADP also has a slight upside surprise. Employment data within PMI is as follows. This is how you do it. So we'll go to today because there was services PMIs. You click this little yellow folder. You click latest release. It then brings up the ISM website. You click view report. You scroll down. And then in here you have employment. So employment this week was okay. It's still contractionary because it's below 50, but that's a minor increase. Then we add on minor increase. This is what I would do. I don't use it as a trade idea, obviously, because we don't trade news, but minor increase. What I would then think is likelihood is NFP should do okay. That's it. I don't do any other things apart from that because obviously I'm not trading like the news, right? I use the news as a gauge to think, is this news that comes out battling the view that I have already? Like if I'm short the dollar, but I see really strong NFP, then I know for the next however long, I'm not going to sell NFP. That's it. Or I'm not going to sell the dollar, sorry. That's all I use it for until we get to a high time frame supply zone. And then we will look for potential breaker structures when something comes through. But that's generally how you would do it to understand data, but don't use it as a gauge for trade ideas. Please don't do that because you'll take a lot more losses than you would care to admit. Let me double check the questions. How to manage risk if anything is trailing stop loss? Personally, I don't trail stop loss. I would move stop loss to break even and then take partials on the way up, which is pretty much the same as trailing stop loss. To understand how much more price action has to go is to understand if fundamentals are still pointing upside. Let's say you're long. So you now think, does it still make sense to long it? If it does, then you still continue to hold. You don't sort of get to a high and then be a little bit erratic because we see a little bit of movement and then you take out your long and then it actually continues to go higher and then you've just missed another big leg up. So with trailing stop loss, I've never really done that. I've always done partials, but it's pretty much the same. I'll take partials at high time frame highs or whole numbers. And however much I want to do is pretty much how I feel on the day, really, to be honest. How do you manage your emotions? That is a good question. To be honest with you, obviously every person is different and there is a good personality website. I think it's called 19 Personalities or something like that. But basically, the website tells you what sort of trader you are. And for me, I'm more of a chill back, relaxed, high time frame person because I don't want to be on the charts 24/7 or a good portion amount of my day. It's just not a bit of me, unfortunately. So when the emotions, you have to figure out what sort of trader you are. If you are, according to your personality, a higher time frame, but you're trading lower time frame, then you are going to take unnecessary losses. That's all you're going to be doing because mentally you should be going to the higher time frame, but you're trying to restrict yourself to the lower time frame, so you're not really getting the benefits. So for me, I'm a high time frame, and that makes sense. The fundamentals gives me the confidence to hold. Even if I see a pullback, I'll still hold it, as long as the pullback isn't significantly or is happening for a big reason. If it's not and it's something minor, that gives me confidence to hold. And that's kind of how I do my emotions, really, to be honest. Do you take geopolitics into account? Yes, of course. Geopolitics is always important. Here is a good little framework for you to work with. So these are the 3 things that you must be, let's add on 4 actually. These are the 4 things, sorry, you must be watching. GDP, inflation, interest rates, and monetary policy, which obviously ties in with interest rates. Then you have external factors like geopolitics. You have stuff like weather, surprisingly. Like if there's a hurricane through Florida, that can impact NFP, for example. So if you see, I can't remember when this hurricane was, but in Florida, there was like a huge hurricane. This is a good few months ago. And what we saw, right, was that really impacted employment, of course, because it was a huge category 5 that came through Florida. A lot of people were out of jobs. That skewed NFP lower. So if you didn't have an idea that this weather impacted NFP and you saw a really big NFP, like negative NFP, it was really bad NFP, most people who would be following this would think this is just because of the hurricane. It's nothing in the eyes of the market significant, because we already know this. But for somebody who doesn't follow, will see a really big downside surprise in NFP, sell the dollar, and the price action goes opposite and actually goes up. So yes, geopolitics is always important. Weather, like if it's really, like I said, hurricanes, mostly obviously in America. Then you can obviously think about wars, which obviously ties in with geopolitics, because wars can impact like oil prices, which then impacts stuff like Canada, NOK, because NOK is an oil exporting country, or Norway is. Then you can think about, I'm trying to think how I would do it. There's policy, monetary policy, weather, geopolitics. Then you think about pillars, which is stuff like bonds, equities, and commodities. These all impact FX. Commodities, because of stuff like oil, will impact like CAD. Equities, because stuff like risk on, risk off, which then obviously, of course, impacts commodities. Bonds also impacts commodities, equities, and FX. So it's important to learn all of this. These are a very brief concept of what I would be doing. And I'll hope to teach you during these sessions together. But that's basically what I'll be doing, is that's rough framework of what I would be looking at. 16, yes, that is correct. That's the one. I can remember. I'd done that like 2 years ago, but yes, that according to me, I was, what was I again? I was a diplomat, or like one of those diplomat stuff. I think that was my personality. Which best instruments works for you? Instruments wise, what do you mean by that? Can you clarify? How long would you keep your position open when you're up on a position? Good question. Until fundamentals switches. So I will show you an example, screenshot. I posted this into the ChartFanatics Discord. If you're not in there, you can join the Discord. But I put this screenshot in, and I have made a couple of videos on this, by the way. I think I made a video on this on my Insta. But if I open this image here, and this is one of the longs on a high time frame that I did for Australian dollar, New Zealand dollar. So this is on the weekly time frame. But what I would be doing throughout this long, obviously this was screenshotted on the 31st, but since then AN has rallied further. But what I would be doing, right, is enter a long based on X, Y, and Z. Then what I'll be doing is, does it still make sense to long it? Or does it still make sense to hold the position? So if I'm long and we see a pullback, I ask myself, what is the reason for that pullback? If it's nothing significant, I still continue to long and hold and hold and hold until the reason it was long begins to switch. So the reasons I entered that long is as follows. And this is what we should be doing for all currencies, by the way. So RBA at the time was more hawkish. So this is my reasoning. RBNZ, which is the New Zealand Central Bank, was dovish. I'll speak about these terms in other sessions, but if not, you can use Google, of course. Employment data, my spelling is off today. Employment data in New Zealand was poor. In addition to that, we had higher equities. So that's one of the pillars, and that impacts risk sentiment, which AED is very sensitive to. So that's a long reason. In addition to that, I think those are the main threes, to be honest with you. As a result, that tells me to long AED NZD. What do? Only look for demand zones. As it pulls back, I'm asking, or as it goes higher, I ask, does it make sense still? ... And that's it. If it still makes sense, I still long it or still continue to hold. When I see these reasons begin to change is when I'll exit. And that's pretty much what you'll be doing. And that's how you do it. That's how I would do it personally. Are we currently having a pullback on the DXY, or has power changed the narrative? So let's have a little look at the DXY. And I'll speak about power and I'll show you some examples in just a moment. So, in the examples that we spoke about last week, think about the reason why the dollar has been so weak. So can you please type in the chat, what do you think the reasons why the dollar has been so weak during this period here? Why was the dollar so weak here? Because that actually tells you when a pullback is going to happen. And we apply the same thought process on the way down when we go to sell it. Why is the dollar so strong here? And that's when you use stuff like Bloomberg, which is here. Use stuff like Bloomberg. You can use stuff like Reuters, which is another good news website. You can use stuff like ING. There's loads of news websites out there that will tell you the reasons. And all you do when you're trading fundamentals is just think opposite to the reasons it's so high or so low in the first place. So let's have a little look. Tariffs, correct. Rate cuts, yes. Government shutdown is a little bit more recent. Rate cuts, poor data. Tariffs, maybe because US and China back and forth. Yep, that was one of the tariff scenarios. I will answer that question, the mistake question, in a moment. Elections, possibly. ICT, people. I don't trade ICT or SMT. But yes, everything that everyone was saying in terms of bonds, in terms of obviously lower yields, which will come from the data, tariffs, rate cuts. Cool. Now that we have that good idea as to why the dollar is lower, why do you think the dollar is now going to go higher? Ask yourself this question. If the dollar is lower because we have lower yields, which are these things over here, with a lot of bull steepness, which is a yield curve, or is type of yield curve, but a lot of bull steepness, we had issues with data, we had dovish central bank, we had tariffs, China issues, cool. For the dollar to go back up again, you have to just think opposite as to the reason why it's so low in the first place. So how much more can a dollar strengthen by? Is exactly the same reason why it's so high in the first place. And the reason is this. And this is all we ask. Every single week, we ask this exact question. Is this. USD is higher because the Fed was hawkish. Why was he hawkish? Basically because the shutdown hasn't given the employment data. NFP, unemployment rate, BLS data, basically. So what we now have to think is, if this is the reason why the dollar is so high in the first place, obviously you can add on external factors, stuff such as JPY weakness, That's one of the reasons as to another additional reason why the dollar is stronger. But it's mostly these things here, and that's like externally second tier factor. Now what we ask ourselves is this changing? i.e., are we seeing news that points opposite to this, what we just spoke about above? If we begin to see that, what do you see? You begin to see break of structures out of a higher time frame supply zone or whole number. And once we see that and we have the fundamental reasoning, then we get in. But until we see that, we don't sell the dollar because we're battling the reason why it's so high in the first place. It's like trying to catch a falling knife. Like if you are trading Bitcoin, for example, and we're seeing massive crashes, and we're not talking about investing, we're talking about trading here, and you're just gonna try and buy it. Buy. Well, momentum is obviously against you, which does make sense. Maybe the shorter term trend is it also against you? So you're gonna take an unnecessary loss. Similar for equities. I know we have a lot of ES people here, NAS people. NAS and ES is rallying has been for quite a while, doing a nice uptrend. Trying to sell in an uptrend is not exactly the best of information to do, is it? So what you want to do is to get into a nice big sell, is to wait for a reason to come through that would suggest a sell. If nothing comes through, you only look for buys. And it's the same thing here when you look at the dollar. Gold is the most asset. Yes. It used to be traded against, or the dollar used to be pegged against the dollar. But not anymore. I think that's the Bretton Agreement, if I remember correctly. No dollar will go down. BTC and commodity will go high. Commodities like gold, I'd agree with. Bitcoin, I used to follow crypto, not as much anymore, to be honest with you. But all we think about, right, is just opposite to the reason the dollar is stronger. So what we do is on the calendar, each week, we ask ourselves, is there any data here, and of course the week afters, that would point to this changing? If nothing begins to change, or the data doesn't suggest a change, the dollar will continue to trade higher. And that's all we're thinking. So let's have a little look at some bank views, because as you know, I always try to find as many examples. But that's basically what I'll be doing when you were trying to learn fundamentals, right? It's just applying logic, number one, and just trading the technicals in that direction. But we'll get on to next week GDP, and we'll start going into the educational perspective of fundamentals. So let me open up some views from specific banks, and let's have a little look. So firstly, let's start off with this JPM doc, and we'll have a little look at what they have to say about the euro firstly. So like what Louise, who wrote this doc, but before I speak about it, let's have a little look at the giveaways. So let me get that list up for us, and we'll have a little look. Let me wait for that list to be pasted in, and once it does, we'll start the giveaway. But nevertheless, let me answer some questions. I need directional prediction from fundamental analysis, which currency is strong and what is weak, to pair them. Yes, so a good one that I'm looking at is Euro New Zealand at the moment. So I'm in a long from Euro New Zealand I'll show you. And I'll tell you the reasonings why as well. Euro New Zealand here. So I'm in a long from Euro New Zealand at this region. And the reason being, or the reasons I am in a long, obviously I'm break even now, so if it comes a bit lower, it is what it is. I haven't taken a loss, that's the main thing. The reasons are as follows. Euro, so here's the Euro fundamentals, and here's the New Zealand fundamentals. Number one for Europe, politics has got better. Cool. In addition, we have seen some stability in the data. ECB still on the sidelines. Basically, they don't want to, jump aboard and sort of give the market some sort of idea that they want to cut. So that's mostly quite simple fundamentals for Europe. Then for New Zealand, it's basically actually very the same as AN, to be fair to you. Dovish, RBNZ. We have issues with growth because recent growth data that came out was not great. In addition, we do have, if I'll just double check from my memory, I think the New Zealand 2 years were coming in a bit lower. Obviously a little bit of a pop today, but nothing to really be concerned about. But you can see the overall trend was kind of massively lower. So from a rate differentials perspective, Euro New Zealand should go higher. So what I'll do then is add on the rate spreads between Europe's 2 year versus New Zealand's 2 year. And you can see that it's generally actually following rate differentials. How do we understand how far? These are the questions you ask, by the way. Does the ECB still stay on hold? If it's a yes, perfect. Does the RBNZ come in more dovish? Probably, because recent data is not great. Yes. So this spread should go higher, which will drag Euro New Zealand higher with it. As a result, that's why I'm long. That's pretty much what we do. Oh yeah, we can't see it. Sorry, let me just do that. There we go. So you can see here what I'll be doing, asking these questions here. And that's it. That's all we do. So I'm in a long here. This is the chart, by the way. There we go. These are the questions I ask myself when I enter. If these things are still continuing, I continue to go long. Cool. So I will now put it on to the giveaway stuff. So obviously the first one will be let me double check. Sorry. It will be 300k Apex account. So let me just quickly copy and paste this list. Copy. And let me drag through this over here. Perfect. All right, sweet. So let me just, there we go. So I'll paste the entire list that we have on here. And obviously this one, as you know, is for a 300k Apex account. And then the next one is, let me just go to there, a 3-month TradeZella. And then the one after is a funded next account. Cool. So here we go. Good luck to those. Remember, please, before I spin this, you have to put something into the chat to make sure you're here. Otherwise, it would be unfair for those who clicked join, left, then got the account. I would be pretty annoyed if I was you. And then what you have to do is you have to open a ticket in the Discord within 24 hours, and then it will get sent to you. So let's go. So, Ron's8686, if you please put it into the chat to say you're here. If not, we will re-roll. Let's see. The chat is a little bit lag, but from what I say something to when it comes from to YouTube, it's obviously like a 15-second delay. So if I wait and pause, I'm just waiting for Ron's8686 to put something into the chat. If not, oh, cool, he is here. There he is. Cool. There you are. So what you have to do now, go into the Discord, open a ticket, and then you'll be entered. So let me remove you from the list, and we will re-spin for a 3-month TradeZella. So let's go. Funny Anime 10101. If you can please drop and say you're here into the chat. If not, as you know, we will re-roll. So once I see you commented, I'll remove and then I shall re-roll for a funded next account. Let's see. WW, perfect. There you are. So I'll remove you from the list. And then the last one is a funded next account. And then afterwards, what we're going to do is we'll look at some institutional views about where the dollar can go. And then afterwards, we'll go from there. So this is now for a funded next account. UDay M53 or M5S 3B. So I'll wait, see if you put something like here into the YouTube chat, and then as you know, you have to then open up a ticket, and then from there you will get the details for the funded next account. So this list, for those who are wondering, is sent to me from those who have clicked join. So everybody has clicked join and then gets sent, and then I chuck it into here, and then whoever wins wins. So let's see. Is UDay M5S 3B here? I'll give it a little bit of time. I'll give it until 50. We'll go 30, 15 to 20 seconds. Okay. I want to be as fair as I can be, but unfortunately, we will need to move on in just a moment. Cool. It doesn't seem like they're here, so we will re-roll. That's a bit unfortunate, but it is what it is. Right, let's remove and re-roll. This is for a funded next account, by the way. Messi I6M1V, if you are here. I am here. Okay. Oh, that's a bit unfortunate. I'll let the mods sort that out. But unfortunately, that's nothing else I can do. It's up to whatever the mods decide. So apart from that, if Messi I6M1V is not here, you are here. Perfect. All right, sweet. You're here. That is the giveaways. Now, let's get back onto what some of the institutions are saying. So what you notice, right, in some of these is they will have a bias. They'll talk about what's going on. And then afterwards, what they'll do is then they try and think about how do we apply this to charts. And this is what we should be doing at all times, is thinking about what comes out. Does this change anything? If it adds to the bias, perfect. That gives you even more confidence to hold. If it battles the bias a bit, you know, you may not want to enter much. Or if you entered here, for example, and it's moved only a little bit, it will probably come back through your entry. And then that's up to you as a discretion to either hold it through if it stop loss. If not, you exit at a minor loss. That's personal to the trader. But let's have a little look as to what these guys are saying here. So what they're saying is, they did actually talk about the BOE, which I'll get onto here actually. But they said, thing for me is dollar went up in a reaction to Powell and rates markets, so that's the bond market, repricing for December. is probably now fair. In the meantime, Europe data eased concerns and we raised the growth forecast globally. So my narrative have been that the greenback rally, whilst justified, should not have longer term legs. And the reason for that is because a few people are still forecasting for the data to come in lower for the US. But the only thing is, it's unfortunate because we haven't had NFP, we haven't had unemployment rate. So it's a bit difficult at the moment to suggest that we are going to see a much more dovish Fed. We're going to get into more dollar shorts because remember, what you think is as follows. Let me delete this. You think as follows. What is the reason the dollar is stronger? Pretty much what Louise said. Justified because markets have pushed back a December rate cut. So what do we need now for the dollar to come back in lower? For a December rate cut and possibly more to increase in probability. So I think markets do still expect a rate cut, but not as in terms of probabilities as they were prior to the Fed meeting. So how do we understand when the dollar's now going to turn? Is purely think, what is the reason it's higher in the first place? And just think opposite. So like what Louise said here, you can see that greenback was justified, should not have longer term legs. Handicapping the recent equity market concern is more tricky. Two other things to navigate and perhaps why conviction levels can't be overly high. Firstly, the closer we get the government reopening, do we get a knee-jerk dollar move as the market assumes pressure valve being released for the US economy? Does anybody know what she means by this sentence here? The closer we get to a government reopening, do we get a knee-jerk dollar move as the market assumes pressure valve being released for the US economy? Does anybody know what that means in particular? And I'll speak about it if you don't know about it. But just let's break it down. If you're unsure about stuff, try and break it down step by step. Closer we get to a government reopening, dollar knee-jerks dollar or a knee-jerk dollar. Basically, erratic when you knee-jerks, a big push. Assumes the pressure valve being released for the US economy. That's the thing I'm asking here. That's what we're thinking. Pressure valve. Is the DXY going to go to 105? Good question. Where are we now? We're at 100. For the dollar to go up to 105, you are going to need something significant because that is roughly, I don't know how many pips that is. That's about euro dollar of around 110. About 110, I think. So I don't think we'll get there unless we see something happen. But it's possible. All we do is we just monitor the data each week and think, does it make sense? Does it make sense? Does it make sense? What you basically do is you go long the dollar until something changes. And once it changes, you exit and go short. If you're in a long and it makes sense for 105, then we continue to hold to 105. But as of right now, it's hard to say, and I don't personally think so. So the pressure relief vows, the little statement she's mentioning there, is think of it like opening a... I'm trying to think how I can put this into a description. You know when you open a can and it goes and all of the pressure is released. The reason she's saying the market assumes a pressure valve release for the US economy is because we haven't seen the US data for employment. We haven't seen it for NFP. We haven't seen it for unemployment rate. And this, well, a large consensus suggests it should be pretty bad, or the growth should be not great. That's what they mean by pressure release, where we've not had all of this data and then suddenly it all comes through all at once. And that would suggest possibly more rate cuts after December. If that's the case, the dollar will see a big, like she said there, knee-jerk reaction, basically a huge sell-off. But until it happens, we don't know. We just have to wait until the lockdown ends. Secondly, the Supreme Court proceedings, which began today ruling on the legality of the IEEPA tariffs, and even if against Trump, how he reacts is anyone's guess. Basically, he is quite erratic, as we all know, and as a result, he could just say something and the dollar just comes crashing down. If he begins to, there's a good phrase that I saw. It was stuff like, if Trump begins to undermine the credibility of the Fed, the dollar comes in lower. Because the Fed is meant to be independent and they're meant to do separate to what the government pressures them to do. So if Trump pressures them and they do it, it basically tells us that Trump controls what the Fed does, which is not a good sign for any economy, by the way. So that is one of the reasons. So before I end it, I just want to mention some stuff. It is the last day that you can get 70% off on Apex. So please, please, please use that to your advantage. 70% off. I would be very happy with that. But yes, it's the last day. So if you don't use it, unfortunately, you won't get the 70%. So please, please, please use code CF and you'll get 70% off. Now, what she then mentions towards the bottom is very little to add. Surprising me a touch, since I thought we were plenty who had turned more pessimistic. Since the prolonged selling is a tad concerning, so they're talking about selling of euro dollar. Nevertheless, still preserving for now. August lows, which should coincide with the 200-day moving average next week, reversing the concerning pattern of being unable to clear the first resistance would be helpful. Today feels a bit more like a 115.25 to 135 range. And obviously we had NFP, which is ADP, sorry, which is actually okay. And then the PMIs as well, which was decent as well. So what she's saying is she wants to be short the dollar. She just has to have and wait for that reason to come through. And that's what we were speaking about how we have to just think opposite to the reason the dollar is so strong in the first place. That tells you when you need to get in a short on the dollar. I'd actually very much like it to pull back higher because we can get in at a much better area. But if something comes out and then the lockdown ends and then we see that pressure release of really bad data, and then the Fed is going to have to cut by a lot more. You're going to see yields coming quite significantly lower, as it has been doing recently, since basically May. And then from there, you remain short the dollar. So then you think, who benefits in a short dollar environment? Equities goes higher. Actually, to be fair, it might go lower because it brings forth risk, recession fears. But from a currency perspective, AU longs would make a lot of sense. Dollar yen shorts make a lot of sense. Euro dollar longs would make a lot of sense. So there's not so much GU because of the UK at the moment. It's not exactly in the great state. But those are the trades that I am looking for when the dollar comes in lower. But apart from that, everybody, that is myself. Are there any questions before I end the call? Next week, we'll be covering a bit more on the economic data perspective. How do we interpret it in a bit more detail? And we'll cover the bit on the basics, but until then, please go out and research a bit on the GDP perspective, components of GDP, what makes up GDP, how do we apply this? Because you see this data on the charts and it impacts the dollar quite massively, and of course the pound, pretty much everybody. What does this mean? What are the components? How do we fix this if it's really poor? Etc. So that's what we'll be covering next week. But if there are no questions, let me just scroll up and double check to see if there has been any that I've missed. I don't think I see anyone. No, that's perfect. Cool. Apart from that, everybody, I appreciate you all for being here, and I'll of course see you next week. Take care and be safe.